Hello, how are you today? I get questions about cryptocurrency all the time. Can people use it as a down payment? Can people use it for reserves? Can we count it as income? I'm going to go ahead and go through that. I'm going to explain some of the rules in regards to cryptocurrency today. Also, I get asked about HELOCs. Do we offer them? Are they any good? And I'm going to talk about that in just a couple minutes as well. And then I'm going to finish with some five-star reviews. Really happy to have received a number of those. So let's talk about cryptocurrency first, though. Cryptocurrency is an interesting animal. Cryptocurrency is a different currency. So that's one of the first things to understand. Everything that happens in mortgages typically happens in US dollars. And so, therefore, anytime we involve any other currency, it's going to have to get transitioned into the US dollar. Now, with cryptocurrencies, it's not only a different currency, but it's also a harder to document currency. When these first rolled out over the last several years, you'd have a wallet or some way of documenting or controlling that cryptocurrency. But when we went into those accounts, Coinbase, for example, and we went to like a normal bank statement kind of thing, we'd go to download a bank statement or something like that, and we just simply couldn't. The most insightful information we would typically be able to download would be something along the lines of a spreadsheet. And the problem with that is it's not acceptable to the banks as, I mean, a spreadsheet, anybody can fill it out. We're looking for third-party verification stuff. So, but that was then, this is now. What's happened, what's changed. So, cryptocurrency. Let me also include other assets here for a second. So, if you want to buy a house, remember in the United States, there's five agencies: Fannie Mae, Freddie Mac, FHA, VA, and USDA. And those are the five main agencies that are responsible for about 95% of the loans done in the United States. Those five agencies are actually governed by law. The Dodd-Frank bill in what was it, 2011, that basically made a lot of their rules kind of permanent. Also makes them harder and more stiff and harder to adjust and change for. But outside those five, there's another whole other market called a non-QM or non-conforming mortgage or qualified mortgage. And so those are different names that we call it, but it just basically means it's none of these five. And that segment of the market has definitely grown a lot. Mostly that those are just loans that are done by the banks or the credit unions out there with their own money. All of them count as non-QM. But there's also a segment where people are basically doing the same thing they do with normal mortgages. They're pooling those loans together into these larger investments. We'll call them mortgage-backed securities. Excuse me. And yeah, they're kind of making a whole market of it as opposed to just a little niche at one little bank or credit union. So I'm gonna touch on Fannie, Freddie, FHA, those five agencies briefly, and then I'm gonna spend most of my answers. Most of my answers are gonna be from the non-QM space. And so as the agencies can document and you can kind of conform to their little bucket or their square peg, square hole kind of idea. When you can conform to that, then they're going to follow. So not a lot of cryptocurrency is getting used in there, not without transferring it and converting it to US dollars. But if you want to just pause for 1 second and kind of make sure you understand the whole thing, if you have, for example, if you have a 401k and you're 40 years old, then that means that if you were to access your 401k, you're typically going to pay a 10% penalty because you're underage, and you're probably going to inflict taxes. And so typically when a normal mortgage lender is going to look at through one of those five agencies, going to look at a 401k, we're only going to count 70% or potentially even 60% of its current balance as funds that we can use for closing or reserves or anything. And that's simply because of what I'm explaining, that you have those other costs. With cryptocurrency, how the banks are typically looking at cryptocurrency is recognizing that it can be super volatile, and recognizing that they're basically looking now, the ones that are accepting it, at about a 50% of the valuation. So if you have $500,000 in your, well, it's not US dollars, right? It's whatever it is that you got. But if it's converted ratio or converted value is 500,000 US dollars, then the banks that we're talking about are typically going to use $250,000 as available funds. So, with that understanding, this is really, really cool. This is really big news. We now are able to, if you're putting 10% down or more, we are now able to use cryptocurrency as both down payment and reserves and even income. So let me explain how each of these work. So down payment, pretty straightforward. We do need to document the cryptocurrency account, which is easier in some of the more established wallets like Coinbase. No affinity to Coinbase, by the way. It's just the one that I know. Frankly, I'm not a crazy expert with cryptocurrency. In fact, I know very little. But I have had several clients who very much are experts on cryptocurrency and they make a ton of money through it. They know what they're talking about and doing. And so, anyway, but if you're able to document the value of it, which most of the bigger wallets can do now with a kind of an official bank statement, if you can download that, then we can count that as your asset. And then if you transfer it into US dollars, we use 100% of what you transfer as your down payment. So that part's pretty straightforward. What about reserves? So reserves, you don't actually have to convert it. You can leave it in the cryptocurrency, leave it traded as it is. But how do we calculate the reserves? Now, again, what are reserves? Reserves is how many months can you make that monthly payment if your monthly payment is going to be $4,000 and you have, a whole year of reserves that you have to have. That's $48,000. We have to be able to document. You have that 48,000 after closing. So it's a savings account. So again, how we count that is we're going to count 50% of the valuation of the cryptocurrency. And as long as that equals the reserves that you're required to have, you're home free. What about the income? How do we count the income? That one's interesting. So there's two ways that we refer to this. So asset qualifier and asset depletion. So let me just kind of walk you through what this means a little bit. And they're just different ways that the banks refer to it or look at assets. So it's probably no shocker to people. Um, yeah, I thought I'd been talking and not recording, and that would be awkward. Had to start over. But it looks like we're recording, so I'll continue. So asset qualifier and asset depletion. Asset depletion is a pattern that we follow that Fannie Mae and Freddie Mac actually use, where they'll take your asset, whatever it is, let's say it's $1 million, and they'll divide that over, for Fannie Mae, it's 30 years, and for Freddie Mac, it's 20 years. Both, I think, are ridiculously conservative because you're gonna earn interest on any. You can park it in a CD or something like that for 20 years, and you're gonna have more available funds than what they're giving you credit for. But whatever, that's how it works. And so if it's $1 million, you divide that by 240 months for Freddie Mac. And since I didn't do this math before this video, I will just do the math now. So that would give you $4,166 a month of income. Now, you don't actually have to convert the asset. You don't have to do anything. It's just you give me a bank statement that shows $1 million. I'm going to divide that by 240. I'm going to add $4,100 a month to your income. That's how that works. Now, outside the agencies, Fannie Mae and Freddie Mac, and you go back into the non-QM space, like I've been talking about, we will actually potentially average it over as little as 5 years. So just a point of reference, $1 million divided by 60 is going to be $16,000 a month. And obviously, if I'm counting $16,000 a month of income for you, well, then that's definitely going to give you a lot more buying power than $4,000 a month. So that's why we're using a lot of non-QM programs nowadays. Now, that one's probably a little bit more aggressive than maybe they should be, but it's the bank's choice to be able to loan. There's no weird terms or anything that come with it. Not even necessarily prepayment penalties or anything like that. It's, it might have a slightly higher rate, but honestly, they're very comparable rates. If you're putting 20 to 30% down, the rates are not only comparable, they're competitive with Fannie Mae and Freddie Mac loans. So a lot of folks, they have these assets, they don't have the income because they maybe sold a business or maybe that's their job is day trading or whatever. And they have the assets, they just don't have the documentable income. Well, then this is a great way to fix that. Now, going back to the cryptocurrency, if I've got a cryptocurrency of $1 million, $2 million, $3 million, whatever somebody's been able to build up, we can actually use that as income for the same exact way that I mentioned earlier. So we're going to pull a statement, which Thankfully, a lot of the current wallets are allowing those pulled statements. And then we're going to shave off 50% because of the volatility that comes with a lot of these. And then whatever that is, we're going to divide it out by the number of months that the lender allows you to do. So somewhere between 5 and 7, 5 and 8 months, or excuse me, 5 and 8 years is pretty typical. That's asset depletion. And then asset qualifier, very similar, but instead of dividing it by a certain number of months, what we're doing is we're taking your mortgage, dividing, figuring out what those payments are for the full 30 years. And as long as you have that much in the asset, then we're good. You qualify. If you need another $100,000 as a down payment, then we subtract the 100,000 and then the monthly payments for the 30 years. And as long as you have enough assets, that's good enough. We don't worry about how much interest you got. We don't call it income. But that's what asset qualifier means. Since we are actually using assets instead of generating income with them, we're just simply using them to pay the debt, right? So that's kind of the long and short of the cryptocurrency role. So yes, the short answer is we are definitely using and allowing cryptocurrency nowadays, and it can open up a ton of doors. Max loan amounts $5 million, and so yeah, we can do all kinds of fun stuff. So reach out with questions about that. Now, HELOCs. I mentioned earlier, some people were asking me if we do HELOCs. I get that question, oh, I don't know, 3, 4 times a week probably. My short answer is I don't. We do, but I don't. I don't advertise them. I guess I'm technically advertising it right now, aren't I? Well, I don't think we're all that great at them as far as HELOCs go. I don't know that we're that competitive on rates or fees, and so I tend to dissuade people a little bit. But what we are extremely competitive on is speed. And frankly, a lot of people prefer speed and convenience these days than they're worried so much about rates and payments, especially if you're only borrowing 50 to $150,000. Payments are really pretty small, even if your rate's 2% higher or something like that. So I just wanted to kind of tell you this story because I had a self-employed individual that we submitted a loan application a week ago Thursday, and we had his approval by, was it Tuesday? Tuesday or Wednesday. I think we closed on Wednesday. And he was self-employed. He has not just one set of tax returns, but he actually has three. So he's got his personal, he's got a business, and then he has another business. So we actually had to submit 2 years of tax returns for all three, and we still were able to get his loan 100% to closing in just whatever that was, 5, 6 days. And so thought that was super awesome. Thought that'd be worth advertising. Um, I mean, man, 6 day closing, hello. And it was, what was his, 150 grand? I want to say it was something like that. So anyway, so yeah, we absolutely can do HELOCs if you're looking for speed and or the ability to get it closed. Self-employed loans get turned down all the time because banks and credit unions, frankly, don't know how to read their paperwork. And to be clear, this bank did not know how to read their paperwork either. It just worked out well. So that's that. Now I'm going to finish, if I can, just kind of talking about 5-star reviews. It is pretty cool to get a 5-star review. And let me see if I can make this any bigger, a little bit. Um, but we have 135-star reviews, so that's pretty cool. I enjoy that. I'm going to grab, well, actually, let me change this. And then I will bring this page over here so I'm not looking away from the camera so much. So back to this, share, and then we will do this. So I just thought this was pretty neat. And so I really like that. Yeah, that's the one. I think we're there. So obviously, who doesn't? I mean, this is business. I get it, and so it's nice when we get a 5-star review. But at the same time, I do get to know pretty much everybody that comes through, and it's nice when somebody has something good to say about you. So I just wanted to kind of show some of these and talk about them a little bit. Obviously, I don't want to give up anybody's privacy because obviously I know a little bit more about each of these reviews here. But also, I mean, we interact with way more people than 130, and so it kind of makes me wonder, like when somebody doesn't leave a review, is it just because they're too busy, or is it because they're not really comfortable leaving a 5-star and they don't want to break our streak? If that's ever you, I would love to hear. Just email me back, text me if you don't feel comfortable sharing whatever it is you're not wanting to post online. But we would hope that all of our clients are not only comfortable but want to share a 5-star review. But I get it. I don't necessarily do reviews all over the place either. So I'll usually choose the ones that have not very many reviews to begin with if I've had a good experience and give them one. Um, but like this one here, I really liked what she had to say. So thanks, Josh and Brandon. This was my first experience ever working with a lender. So obviously she's not owned a home before in this area and never got a mortgage and stuff. I appreciate your kind words of encouragement. Your professionalism is impeccable, laced with your friendly and easy mannerisms, which really put me at ease. I've already given your name to my friends. That's cool. Thank you, Luciano. We really appreciate that. Um, and so thank you. Appreciate that. Brian Karate, one of the talk about a cool last name, right? Karate. Josh and Brandon have been incredible to work with. As first-time homebuyers, my wife and I were honestly overwhelmed by the process going into the process, but they made everything feel simple, clear, and manageable from the start to finish. To be clear, Bryant was one of the coolest people I've worked with. Super chill. Him and his wife, very good people. So I think he might just be being a little bit nice, and he's probably just a nice person in general. But anyway, what we appreciated most was that it never felt transactional. Instead of feeling like we were being sold a loan, we felt like we were being taught and coached. That is definitely how we feel we run our business also. That is definitely a goal of ours. They took the time to explain each step, answer each question, help us understand how to use our home as a long-term investment. They were easy to reach, quick to respond, and efficient throughout the entire process. I feel like he was like answering a series of questions here with what he included. So anyway, thanks so much, Brent. We appreciate that. Um, yeah, when I get these reviews, especially like, I mean, it's not like he's left a lot of reviews, right? That's just a few. Just this is her first one, and so that's pretty, I appreciate that. I feel like that's a good thing. Um, Amanda's an agent. Loriana was an agent. It's nice to see what other agents will say about us. Realtors. I was the seller's agent on a transaction, and Josh was helping the buyers with their mortgage. Josh was great. He communicated with every update and was able to close the buyers early. Yes, that sounds very much like us. Josh was great. He kept me updated throughout the entire process and took out all the stress and guesswork. Thank you, Lorena. We're glad that that felt good. Jill Gertson down here is also a realtor. So it's nice to have the endorsement of several realtors. Josh Thomas Mortgage and Brandon did a great job for my buyer. They were efficient and were top-notch communicators. I would highly recommend this team. Thank you, Jill. That's super great. Anyway, we got a bunch of these reviews. You can see Mac here, and Glenn Haas. Kristen's another realtor, works down in St. George. Josh's team pulled off a super complicated file and came up with a creative solution that worked for the buyers and sellers. I love that they have a lot of products to choose from for situations that aren't always cut and dried. You mean like cryptocurrency, like we were talking about earlier? Excellent work from this lending team, and I highly recommend Josh and Brandon. We've had the privilege of becoming her preferred lender, so that was super cool. But yeah, we just have lots and lots of reviews in here. So anytime you'd like to know what other people think, and or if you have any reservations and you're not quite comfortable, sharing that, maybe you don't feel like you want to ruin our five-star streak, but at the same time you don't quite feel like it was 5 stars. I welcome your response. Text me, call me, email me. We want to make it right. If I mean, we're human, right? We're definitely going to make mistakes too. And we've been busy lately, so it's been a little more frequent maybe that we're harder to reach or something. But still closing loans very quickly, so seems like people are happy. The 6-day loan I just told you about, that was what, a week ago. So anyway, that's about what I wanted to cover today. Thanks for spending some time visiting with me. Hopefully it was a great drive or a workout or whatever it was that you were doing when you were listening to me. Um, we'll talk to you later. Have a great day. Great day. Have a great day.